Hi everyone. First off, thanks for signing up. Just going to go through a couple of things here to just make it a bit clearer. Video is always easier than just huge PDF text. So this is the intelligence landing page. Some stuff might get tidied up in time, but the main structure is going to stay the same. First off, global themes. This is what we'll type once a week. A little note from us. Bit longer this week just to get everyone started and let you know what we're about. And then I want to get into the first off the economic models. These are going to expand in time, but as you can imagine, it takes quite a lot of time to slowly model and map global macro. So for now, we are showing two models that we have. One is for the US CPI. The inflation, and the other is for US GDP or growth. We feel, along with many others, that these are two pivotal things that you want to be able to model and map and keep an eye on, because the growth and inflation is kind of what drives a lot of things. And I think Ray Dalio believes the same. So you can click on these here, and you see our CPI model here in orange. The turquoise is the actual CPI data, and then the same for the GDP. The model is in orange and turquoise for the GDP. Going on, we've got our embedded models, and I want to spend a bit more time on those. So there's three parts to each. You got the Macrohedged market metrics. So this is the trend and the range. And I'll go into more detail in a minute. Then you've got the Macrohedged IV30, which is the implied vol. And we've made that on a 30-day constant maturity basis, and it's indexed as well. And then we have our turn USS and DSS, and these are basically measures of showing you how cheap or rich the out-of-the-money options are over 30 days for that asset. So let's just dive into these. So there's 6 asset classes here. We've got equity index, fixed income, foreign exchange, metals, energy, agricultural, and then we will be adding the meats and some softs in time, and maybe other assets. Maybe bulk this out, but for now, I think this is enough to be getting started. So you can see here, equity index. It's coloured cheap, average, rich. For all of the gauges, cheap being blue, average grey, rich orange. We'll start off with the S&P here. So you see here, trend, bullish. This will either be bullish, neutral, or bearish. The upper and lower ranges are a proprietary range that I created, and it's based on volatility. So the idea is, if you were in a bullish trend, you would look to initiate a long position if we reached the lower end of the range. Or if we were looking for shorts, maybe we would look to initiate a short position at the upper end of the range. It's just to try and keep you doing business in a more sensible area. This is, you see this for each asset here. Then we go on to the MHIV30, so this is our implied volatility, and it's indexed 0 to 100. Over the last year, this is comparing values to, and it is showing you that 0 would be very low vol, and 100 being very high vol. So you might use this if you're trying to get an idea of where the volatility is, or if you're trying to decide on which option spread you're going to take. If it has a large Vega component or a lot of Vega dollars in your spread, you're unlikely, that would then dictate where and what spread you're going to take. Don't want to delve too much into the option spreads now. And then going on to the MH turn USS and DSS. These are judging whether whether there is value in upside out the money options, as in calls, or whether there is value in downside out the money options. And this is the methodology behind calculating this is proprietary, But I will share in a minute a euro-dollar chart, and I'll also share charts in the next few days of every single asset on here, of showing you how the gauges looked against the underlying over time, so you can see, did this work? How did it work? So then you can judge for yourself how you want to use the gauges. So we'll scroll down and we'll have a look here. So this is essentially saying, let's find one that's nearest an extreme. So you see the Dow, and I don't have a chart of the Dow right now. I have a euro one, and I'll show you that in a minute. But you can see the Dow is at extreme, so it's showing you that the upside in the Dow is very cheap, and the downside is very overpriced here. And that's what that's telling you. If it was the other way around and the USS was near the high, it would be telling you that the upside is very expensive, and maybe if the calls were towards the blue, they'd be saying the puts were towards the blue, they'd be saying that the puts are cheaper. So we scroll down and we have a look here on this this example here. This is the euro, and showing you here, this is the blue line here, or the candlestick chart is the euro against the US dollar. This is the spot, but just for reference, all of the prices in here are the futures. It's the front month future. So when you see the FX stuff, it's all front month future. This blue line here is the call option, upside call option, out the money value, and you can see here with the, it's kind of the 0.8 on the upside and then the 0.2 on the downside. It shows you where it picks inflection points, but I'm not, I don't like just saying to you, oh, go away and pick inflection points with it, but it gives you an idea of how the, how the skew is essentially. So it's showing you that there is, there is a value, or if something's, undervalued or overvalued, that's what it's showing you. So it's showing you, you can see multiple times here when that the euro calls were overvalued, and for a long time the puts were actually undervalued, which was so you can do two things here. You could say, okay, well I'm seeing that the puts are relatively undervalued, so I'm going to look to sell rallies at the top end of the range. I'm going to be looking to get myself some cheap puts. That's how I'd view that. And that paid off okay going, but in hindsight, it's very easy. But that's essentially how I would use this. So once you have all of the charts to then look at the assets and see how that asset reacted to its out the money options being overvalued or undervalued, depending on the call side or the put side, then you can decide, and how to add that into your own strategy. And hopefully, this is a little bit more than just creating another derivative of price, which is very easy to do. You just, you create another derivative, or you take price and you do something else with it. We're really judging something that's not related to price and showing you where the value or richness is. As always, with everything we do, if you have any questions, please ask, and we will constantly be trying to improve what we're offering. So this page won't be static. It's going to keep improving, and we'll post more videos somewhere. Cheers.